Hello, guys, and welcome to another post market analysis of Bank Nifty and Nifty. So, today it's been a crazy day in the Bank Nifty. You see the kind of momentum that the Bank Nifty has created today. See, the market has opened around 47,950 levels and it has come all the way down to 47,600. That's a pretty good momentum towards the downside till 10 o'clock, and then suddenly reacted from there and has seen some sort of pullbacks, but then again gone there. But again, it has come down and it has closed somewhere here. So this has been an absolutely crazy day because of the kind of momentum that it created both on the downside, towards the downside, and also towards the upside. Okay, so let's see how it was on a daily chart, how it's going to be. Excuse me. So how is it going to be on a daily chart? So yesterday we have discussed that it is a bearish day yesterday because we have seen in spite of the gap down opening yesterday, and we have seen a bearish momentum towards the downside, which is a downside. It tends like the bank nifty is interested to for some sort of correction, but while discussing that point yesterday, we have also discussed that all these levels are going to be important levels for the bank nifty if it is coming down. Okay, so this entire zone and even this low, all these reactions are going to take important levels as a support while the bank nifty is coming down, and that is what has happened. See, bank nifty has taken support at this level, and it has sharply reacted, and to be accurate, okay, it has almost taken this low as support for today's momentum. It has come almost till that level, and then has seen a very sharp bounce towards the upside, and then maintained that level. Okay, it made sure that this level is not broken. So even tomorrow, if you are trading, this level becomes very important for tomorrow's market in the bank nifty because of excuse me, because of these two reactions happening at almost that same level of 47,650 levels. On the upper side, if you want to be bullish, you have to be waiting. We cannot say that the market is continuing its rally until we see a close above 48,000 to 16 levels on a daily chart, but on an intraday level, you can create your own swing high and low and see and create support and resistance levels accordingly, and then take trades according to those levels which you have created. I'll show you that in a moment, how to create those levels in our intraday chart. So that's it with the bank nifty. So coming to the nifty, it's nifty has reacted even see in yesterday and in the last couple of days we have been talking that even yesterday, this is an inside candle formation, which is a harami candle formation. Okay, if we see any close above this, we could have been bullish towards the upper side. We can say that the nifty is again continuing rallying, but for now, even today is a sort of a bearish momentum. But this reaction has given nifty a tremendous confidence. So this reaction is going to be very important for the nifty. So if it is coming down in the last couple of days, also in our previous post market analysis video, we were talking that if nifty has to come down, it has to pass many levels of support, unlike bank nifty. So that is what has happened. So one of the supports for the nifty has performed very well today, and from there prices have reacted very sharply. And here we have seen uh, a candle which is almost see, if you ignore a part of this tip or the upper shadow of this candle, then it is a hanging man candle formation. So tomorrow, if you see any confirmation candle below this, then for some time we can expect nifty to perform down. But in order to be bullish, again, you need to see a close above this 21,500 level, and 20,500 level is it's going to act as a mile. It's a very important level for the nifty, because that is a round number, and that is the highest round number that nifty has ever seen. So that level looks like it's acting as a very strong resistance for the time being. But if you want to take trades, you can take trades based on your support and resistance levels, which are derived from your swing low and high from your intraday chart, and then you can trade accordingly. So let's see how to do that from by looking at today's price action, starting with the bank nifty. So this is the bank nifty chart, and let's get our 5 minute time frame here. Yes, this is the 5 minute time frame, and see here we have seen a bank nifty opening at 47,950 level. Immediately it has seen uh, the momentum towards the downside, and it has given us a close after 150 points towards the downside. And the next candle, the first three candles on a 5 minute time frame are red candles. But if you notice the real body, obviously first body is going to be large, but this is a way too larger than the usual candle. Okay, after that, third candle is a doji candle. But all these three candles in the single color, it tells that the market is interested towards the downside. Excuse me. So this is the first place where after half an hour on a 5 minute time frame, this is the first place where you have seen a green candle. So what you should do here is, from here, levels should become, see, you should mark these levels very importantly. See, after that, this level is important, right? And after that, yeah, this level is also important, because from that is the place where we have seen reactions from the chart before. You see, after this, okay, nifty, sorry, bank nifty, it has taken support from this level. Here you could have been bullish, but your target is very far. Okay, you are right at this, you are right at this reaction, so it is not a very good point to trade. But whereas here, this is this particular candle right here, 1005 candle, is a variation of a piercing pattern candle. Okay, we're talking about this candle. This is a variation of piercing pattern candle. We have a video on piercing pattern in our candlestick pattern series. If you want, you can take that for your reference. So here you can take a trade, because you have, your targets are little far, and also your targets are giving good risk versus reward ratio. So if you are entering there, and that becomes your target, and this becomes your stop loss, in this case your risk versus reward ratio is 1 is to 7, and it worked here. Okay, so now you can get rid of these two lines, and this becomes your swing low, and that also becomes your support. And this is the place from where the bank nifty has seen a very sharp downfall towards the downside. So by now you could mark that as your resistance level. So if this is your first target, where is your next target? Your next target is somewhere here. Okay, so you can trail it till there, and where is your next target? That is your next target. Very simple trade. Okay, if you know how to play with support and resistance levels, and little bit of candlestick pattern and knowledge, if you know what candlestick patterns are, then this trade is very obvious, a hit for you. Here you have seen 282 points in this particular trade alone. So here we are writing 282. Okay, and then here, this is the place which is, since that is a resistance level, and this is a kind of a dark cloud cover, which is 10% less than to become bearish engulfing pattern. So here, if you want to take a trade, your next target could have been this towards the downside. Let's check whether you had an opportunity there. Okay, yeah, your obvious stop loss is right above that, and this is your target. So in this case, it's not, your risk versus reward ratio is not great, it is not one. Okay, you are gaining only half out of your risk, so it's not worth taking a trade there. Then where was your next trade? Okay, so if you are entering there, if you are exiting there, okay, so that becomes your support, and this becomes your support zone. So here, if you see, here at the bottom end of your this previous swing low, here you have seen a green candle. This is also a piercing pattern. Okay, again, I'll show you that with greater detail by zooming in. So, yeah, so here if you see, this candle's low is obviously, and this candle's open is lower than this close. It has seen little bit of gap down opening, but it has maintained to rally that rally the momentum. Okay, now which has taken it to 47,880 from 47,860. Okay, so what happened with this candle is, you have seen a close above the half of the previous candle's real body, which is nothing but a piercing pattern. So here what has happened is, but that is again a bullish pattern which is coming after a decent downtrend. So here you could have taken another trade, and then keeping the lowest part of that as your stop loss. Okay, so for those who have seen this as a target, those could have not seen this as a proper trade. Those who, though they have not taken a trade, but those who have seen this as the target could have traded this with a good 72 points. After 72 points also, you have seen the last target getting hit for the day, which is 92 points. But to be on a safer side, let's assume that you have not taken it, you have assumed that only this level. Okay, so after that you have seen a breakout there and a break confirmation candle there. That is again an option for you to take a call option, but before that you should see that is your target from the left, because that is a reaction there. Excuse me, I'm sorry for that. So you see, if you want to take a trade there with the green line as your target and your the bottom portion of this as your stop loss, you don't have, right, a proper risk versus reward ratio. So after that, you see this again failed because of this bearish engulfing pattern. Okay, so here you could have taken a trade, but then this as your target, right? Yes, definitely. So you could have taken a trade there because it is coming at an important level. So in this case, your stop loss should be right above this, because this both these two put together is a bearish engulfing pattern. So now your target should have been that, and this should have been your profit, in which case it is hit. Your profit is taken at 1 is to 1 ratio. That's good. And after that, your next target in this trade worked as well. And after that, your next target is way too far here. You could have waited, or you could have, let's assume that you have taken your profit there, but still this is another 95 points. So 280 plus another 95 points is it's approximately another 277 points. Okay, approximately to 7 points in the bank nifty. So I hope you have understood the price action in the bank nifty today. That is how you could have traded. That is the way to look at the market. If you are new to our channel, please do subscribe. If you have not done so, we do this every day. We do this every day by looking at the price action. We see what are the opportunities, what could have been done. We do all sorts of uh, analysis on the 5 minute time frame. So this is a nifty to start with. Even nifty, unlike bank nifty, it has seen two green candles as the second and the third candles, which says that it's not that um, uh, it's not that uh, what do you say, interested in doing going towards the downside as the bank nifty. And here you have seen this becomes your first resistance level, and this becomes your another swing high. Okay, that becomes your another resistance level, and your first swing low was seen somewhere, yeah, here, somewhere here. You could have seen your first swing low. Here you have seen a breakout and also a confirmation candle, but towards the left, if you see, that would have been your target. So you don't see a proper risk versus reward ratio there. Let me show you that. If you want to enter here towards the downside and this is your target, and if your stop loss should be above this point, again, no proper risk versus reward ratio, right? So you could have not bothered to take that trade. Whereas here you have seen again a breakout towards the upper side, and here you have seen again a failed breakout and a inside candle formations. Here you could have taken a trade, and this is definitely a genuine stop loss. Okay, because that could have been your stop loss and this could have been your target. Okay, so this is a loss of say 16 points. Okay, so this right here is a loss of 16 points. Okay, and then here you see again prices are going. You should wait for the market to at least come to this level to see what's happening there. Here you have seen a breakout, but then I mean immediately you have seen a candle, which is an inside candle formation. So here, because the moment is very high, your target is way too far. You could not immediately keep this as your target. Instead, what you could have done is either you should have seen that and kept this as your first target. Okay, and then this as your second target, so this in this case also it looks like it has come to this level, but it has come almost till this level, but didn't reach this target of Fibonacci levels. Okay, so this is a, let's assume that this is a no profit, no gain trade, that because you have seen prices coming down and closing here. At least here you could have adjusted your stop loss so that you have not in the a great loss. So here you have seen again a breakout towards the upside, and then here you have again seen a inside candle formation, and this could have again traded because this right here is an resistance level, right? So here you have seen an inside candle formation. This inside candle formation right there could have asked you to take a trade according to our candlestick pattern analysis, but then again, even this is a genuine stop loss because you have seen a loss above that, and this is your target. And then now here we have seen again a stop loss of minus 11 points, and so here we have 11. And see, after that, here you have seen how many stop losses in the Nifty. You have seen one and you have seen two. And the next thing what you could have done after taking these two stop losses is wait for the prices to come and react at either this level or this level. So here it became very evident that it has formed a good piercing pattern again here, because if you see this green candle close above this, then in that case it could have been a bullish engulfing pattern. But a piercing pattern is also a reversal pattern, and it worked a couple of times in the Bank Nifty, and even it worked here with this as your stop loss right above, right below this level could have been your stop loss. Excuse me that. Okay, and then your next target should have been above this level. Okay, so here in this case you have made 15 points. So here you made around 15 points. We are marking it there. And then here you have seen a failed breakout. Okay, and then here you could have taken a trade towards the downside with this as your target, and again that didn't work. Okay, so this looks like we have seen a couple of stop losses in the Bank Nifty according to our analysis. Okay, so again here let's assume that how much of your stop loss was taken. So till this point, another 18 points, that is 15 minus 18, that is net minus 3. So I'll just write net minus 3. And again here you have seen another inside candle formation there. So from here this should have been your first target, this should have been your second target, and this should have been your last target. Okay, after this should have been the next level of targets that is taken, and this should have been the next target even that is been taken, and this could have been your this, or this could have been your next target. So uh, that didn't happen. So let's assume that you have taken a trade there. Okay, and uh, you have exited your trade at around this location, which is 50 points. Okay, so 50 minus 3, 51 minus 3 is 48 points. So towards the end of the day you are safe on 47 points. So that's how it works. Okay, so if you are very serious about stock markets, you cannot treat it like a uh, part-time money making option. Okay, so if you spend the whole live market towards the Nifty and Bank Nifties, these were the opportunities in Nifty, and uh, these are the opportunities in Bank Nifty. Okay, so both put together, you have seen around 300 points in Nifty and Bank Nifty. Yesterday, we have seen 200 and around the same points. I think yesterday we have seen 270 points. So that's it for today. If you want to learn more on post-market analysis video through the candlestick patterns, first I request you to watch the candlestick pattern series in our playlist so that you know the candlestick patterns better. And after knowing that, you will come to know what we are talking about in the live markets. So that's it for today. See you in our next video. Thank you so much, and please do subscribe if you have not done so yet. Thank you.